AIM for hosting us here for Abu Dhabi Finance Week. A big thank you to all of you for joining. And thank you to our esteemed panelists. We have a hell of a group here, all leading investors, entrepreneurs, and advisors in their own field. A few years ago, we all saw the frothiness and the hypervaluation of the VC and tech market. We're seeing a bit of a comparative cooling now. Starting with you, Tala, from your experience, what's driving this and what can we attribute that to?
Amazing. First of all, we've seen interest rates go up. Obviously, now they're going down. But for the period for when we saw things dry up, interest rates played a really big role because it just made the opportunity cost of investing in venture much higher. Secondly, we also saw pension capital dry up, which meant that the VCs no longer had the dry powder that they had coming into 2019 and 2020. Thirdly, I'd like to think that maybe we learned a thing or two from the big bubble bursting, and that we are smarter investors as a result. But actually, if you look over time, we tend to forget very quickly, and we have the memory of a goldfish. And then finally, I think what's bucking the trend is, in fact, everything that's happening in AI. So when you look at AI businesses, they're raising rounds that are double let's say AI core businesses, because of course now every startup is an AI startup. And there's actually a very good reason for that. It's not just the exuberance, the market exuberance that's driving that. It's that actually the cost of compute is requiring these companies to need more resources. And that additional half that's extra is actually going into investing in compute.
It's interesting you talk about the kind of the AI hype curve as well. And Jordan, in your capacity, you probably get pitched 20, 30, 50 AI ventures a day. Where do you see the direction of travel moving in this kind of subsector? And managing a global portfolio, what are the nuances and similarities or differences you're seeing between markets in terms of how they're pitching AI?
For sure. I think AI is definitely like a big hype at the moment. I feel like there might be a correction next year, particularly with AI companies.
You heard it here first. So,
we've been investing in AI companies for at least a decade. We have about 2,000 portfolio companies. We've been lucky enough to invest in about 35 unicorns. But we've seen like a big trend, particularly with the unicorns. The past 24 months, a lot of them are very curious about what's happening in the Middle East. You see a lot of these big AI funds being announced, and as dry powder is drying up in the West and the East and so on, they're all looking at the Middle East, not just from like a funding perspective, but also from a business development perspective. One of our AI companies that we invested in 10 years ago, we were the first 25K into it. They just closed like a $300 million deal 3 weeks ago with like a big new entity that was teed up in Saudi. So I think like long story short is it is a big hype. But like with us as VCs, investors, it's like a huge risk. And Tala said we have like the memory of a goldfish. It is true, like we're not gonna succeed every time, and we have to find the good ones. We just need one good one to pay for the fund,
Well, the good ones, right? You think scalability and fundamentals, right? And I think maintaining realistic growth targets can often be a huge part of that, and that's embedded within that is operational discipline, right? And so I guess, Dax, from your perspective, when you're playing policeman and vetting all these kind of wide-eyed entrepreneurs, when you talk about operational discipline, what are some of the red flags or criteria attributes that investors really need to scrutinize from a DD perspective?
Yeah, thank you for that. When you're looking at investments for potentially for investors into the region, you have to be very skeptical of the kind of risks that you're trying to manage. We are dealing with, in the region, about 20 to 30 different jurisdictions with different laws, different data protection laws, different AI laws, and it has to be a delicate balance between managing growth as well as assessing the risks. the times of being a disruptor where you just go in, the kind of Ubers of the world where you just go in and the regulation sort of catches up is not there anymore, and you need to really carefully analyze, get the good people on your side so that they can manage and assess those risks for you entering different markets.
And I guess in terms of that journey, right, the path to profitability is always critical. Tyler, you in all your hats as kind of advisor, investor, and on the company side, what's your kind of heed of caution but advice for scale-ups that are managing that pivot from kind of seed to growth, and managing that probably VC investor need of kind of super fast growth, but also maintaining that kind of profitability-led mindset?
Yeah, thinking about it from the perspective of startups, and I'm being humble here because I've never been a founder. What I've observed from my many founders is that, firstly, running a scale-up is very different to a startup. Of course, your core mission is still there, and that's really important. And so the culture needs to somehow carry forward. But you also need to bring in a new legion of skill sets of people who have seen this cycle play out before. And so while your culture at its core is there,